Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of big business. Today, we're diving into the Alamo Group's latest annual report. And trust me, this isn't just about lawn mowers and street sweepers, although they do make those. We are going to uncover a story of a company trying to navigate some pretty bumpy roads. This report, called a 10K, is a deep dive into a company's performance over the past year. It's where they lay out all the details, both good and bad, for investors and regulators to see. Think of it like a corporate tell-all, though it's usually presented in a very careful legal way. For the year ending December 31, 2024, Alamo Group had a total income of about $1.6 billion, but there's a slowdown when you see the results. So what's up at this group? Alamo Group operates through Division and Lie. Division, for years they have focused on keeping our highways and fields trimmed and tidy. You can think lawn mowers, tractor attachments, and tree chippers. The problem? The Vegetation Management Division took a 20% hit in sales. The filing says that market downturn and costs are associated with separation and reduction of capacity. The company made a decision to scale down its operational capacity to meet the demand. The other part of Alamo Group, the Industrial Equipment Division, performed better than expected. Instead, the Industrial Equipment Division increased sales, which meant profits grew. But even this wasn't without its problems. The filing mentions a 5-week strike at Gradall, which affected the earnings of the Industrial Equipment Division. We need to know if there were new issues with the workforce. This transition is happening as the company faces a major change in leadership. The president and CEO, Jeffrey Leonard, has announced his retirement. Leonard took the job in May 2021, and he is out by mid-year. The company says that Leonard's retirement is due to personal reasons and is not the result of any disagreement with the company. They've also appointed a new person for this role. Agnieszka Kamps was appointed executive vice president and chief financial officer of the company in May of 2024. In January 2025, the board of directors of the company increased its quarterly dividend from $0.26 per share to $0.30 per share. This means the company is profitable enough to pay stockholders. The report also goes into detail on the risk the company is facing, including government spending on budgets, labor shortages, price increases, financial markets, and cybersecurity. Let's dive into these. Global trade policies, changes in tariffs, trade wars. These are all things that are out of a company's control. This could lead to reduced economic activity, increased costs, and reduced demand. If any of these things happen, this will adversely impact our sales volume and prices and our consolidated financial results. Cybersecurity, which means people trying to hack into the computer system, is also a big thing they are paying attention to, with the main fear being the loss of data. The report dives into the dangers of weather catastrophes and incidents associated with it. Unusual weather conditions are outside a company's control and can change the way customers act. Now, what about any potential legal troubles? The report states that the company is subject to legal actions, but the cost is small. The company believes that the ultimate outcome of these matters will not have a material adverse effect on the company's consolidated financial position or results of operations, but the ultimate resolution cannot be determined at this time. On October 31, 2024, the company announced that its board of directors approved a share repurchase program under which the company is authorized to repurchase in the aggregate up to $50.0 million of its outstanding stock over 5 years, through October 30, 2029. Alamo Group seems to be taking cybersecurity seriously. This portion of the report shows the different measures and safeguards to protect the data. As of now, they don't believe there have been any significant cybersecurity breaches. The audit committee is responsible for making sure the company has safeguards against breaches. The IT team, led by the vice president of IT and the director of network and information systems, is responsible for day-to-day assessment and management of cybersecurity risks. It's good that the company has a number of safety nets. The report lists the fees from KPMG LLP, the firm that audits their accounting statements. This is generally more of a formality. Lastly, the document also lists the official documents such as the Insider Trading Tipping Policy, 302 certification document, and more. This is more formality to comply with the requirements from Security and Exchange Commission or SEC.